traders. My name is Mark. I am the founder, creator, trader, and strategist for TradingMarketTechnicals.com. I am one of the mentors in the trading room that you will be seeing live every day in the trading room, as well as two other of my members of my team. Together, we have 50 years of combined trading experience. Pretty amazing stuff. And this is what you're going to be learning, as well as having market mentors by your side as the market is opening, as the market is trading, as you are trading and entering stocks. And in this video, the purpose for this video is so that you can get a good grasp on what you are going to be learning. And it's really important. There's a lot of good information out there, and there's also a lot of crappy information out there. And I've always found, being an educator for the last 24 years, being in the marketplace and teaching thousands of individuals, what is the purpose, right? So there's three words: what, why, and how. What are we going to learn? What is the benefit of learning, right? What are we going to learn? Why are we going to be learning that? What are we watching? And how? Most importantly, how do we make money out of it? There's many sites and education firms that says, okay, you throw on a 20-day moving average, and this is how this works, and this is how that works. But they don't tell you how to make money. They don't show you how to make money, and this is what's the gem of this room, is how do we make money live in front of you so you can get a handle on eventually fulfilling your dream of being a full-time trader, doing this on a full-time basis and acting as is your business. This is your business. This is what you do for a living, and this is what our goal is: to train you as the individual to take money out of the market on a consistent basis, okay? So remember, what, why, and how. And that's going to be the three words that's going to make you successful. And why I say that is because I've been through trading in the markets for many years, and been through a lot of individuals teaching, showing things, and this is not how it works. I've been trading the markets for 24 years. I've been on the buy side of the business, the sell side of the business, and I know the dynamic of the marketplace. And I'm going to briefly go over of what you are going to be learning in the market. In front of me, we're going to be teaching you several indicators. Now, yes, indicators, Hosh, everybody knows indicators, right? No. We keep it simple and easy to recognize, and the most valuable tool to be looking at. Now, remember, one thing is price always leads, right? Indicators are lagging to price. However, this will keep you on one of the right sides, and we'll get into detail, obviously, in the trading room. But in this introductory video, I just want to show you a couple of key components. Now, this is a vol spread, and what the vol spread does is it measures, okay, the up-down volume of the S&P 500. It actually gives you the true breadth of the S&P, of what it's doing. And this is very important here. This is just Friday's data. Now, if you could see, we gapped up on Friday, and as the market did fade in the beginning, the vol spread actually stayed higher, right? I'm going to show you how to use this on an intraday basis to keep you on the right side of the trade. Very important. This is key, okay? Let's take a look at two other indicators, and this is going to be the VIX and the tick. Now, everybody pretty much knows what the VIX is. It's a fear factor index, and it is inversely correlated with the market. So if the market is rising, which I showed you in the previous slide, the VIX actually dropped dramatically. And sure enough, the VIX was making lower lows and lower highs, other than a brief push up, but never really took out the daily high here, right? So if that, add this to the tick, and as what does the tick do? The tick measures buy and sell interest in the market, and we have 600 above 600, below 600. In between is pretty much all noise. But what you want to see here is that the tick is staying above zero, and when the tick is above zero, it generally is bullish. Now, there is sometimes the readings are skewed, but if you're looking at the vol spread, the VIX, and the tick, and you get two of the three combined, which is telling you you should not be shorting the market at all. You should be looking for buy setups. You should be looking for pullbacks in strong stocks and looking for an entry to get in. And this here, these three indicators, very simple. And if you use it right, and this is what we're going to be showing you in the market in our trading room, this will keep you. That's half the battle, guys. That is half the battle of keeping you on the right side of the trade. Okay. Now, let's take a look at some of the sectors that we follow on an intraday basis. Okay, what are we going to be following? Well, we're going to be following the transports, which is the the leader of the 5 sectors that we follow. Why? Well, it measures production. It measures the economy. Is the economy chugging along, pushing goods all over the country? Yes, that's what you're looking for. So we're looking at the transports. What else? IWM, Russell 2000. Why? Good gauge of risk, right? It's risk on, risk off type mentality. Russell 2000, the lower priced companies, of course, they come at with more risk, and that's what we're looking at. Is the Russell 2000 chugging along as well with the transports? The Qs, technology, right? We want to see technology moving along, chugging along. That's important. Those are your 3 leaders: the transports, IWM, and the Qs. And that's the transportation sector, the Russell 2000, and the technology sector. When those 3 are chugging along, then you want to be looking at what the S&P is, and of course the laggard would be the Dow Jones. Now, sometimes that doesn't always happen, okay? But we want to see intermarket divergence. Is the transports and the Russell moving higher while the diamonds and the spiders are moving lower? We have intermarket divergence. Or are they all chugging along at the same, moving higher, all as one? That's when you have a strong trend for the day. And that, as a trader, you should be picking out, as well as reading your indicators and putting that all in a package to get to be on the right side of the trade. Very critical here, okay? So this is something else that we're going to be showing you in the trading room on a regular basis. And gap trading, trade setups. Very important. We do look at moving average crossovers, and we do slow it down to a point. And I'm going to show you how to read a 5-minute, a 15-minute, and a 30-minute chart, and what to do starting out as a day trade, and if you wanted to hold it and add to your position and possibly take it as a swing trade. That's where the big money is made. If you start out as a day trade and you're looking at the stock, and case in point CRM, and if you saw that CRM gapped up, pulled back into the averages, and then started just chugging along, well, there is no reason to get out of this trade but to add to the order and making sure that we did get a reversal candle and adding and adding and adding. And as we move higher into the end of the day, having an educated decision saying, hey, I like this, I'm taking half off and I'm taking the other half for an overnight swing trade. That is a trader. That is managing your book, managing your trades, managing your trading account, understanding the position sizing, the risk, knowing what your stop loss is, knowing what your entry point is, and knowing what your take profit is. You notice how I mentioned what your stop loss is first, right? We don't want to say, oh, how much money can I make? No, we want to know what is your stop loss? What am I risking on this trade? Then my entry and then my exits. That is the key, and that's what we're going to teach you, trade management. You're going to understand when to get into a trade, when to bail on a trade, and when to add to the order and maybe possibly hold it as a swing trade. Very critical here. This is critical in the trading plan. A lot of people don't touch on this. Caesars, just to give you a perfect example, moving average crossover. Boom, market actually gapped lower, right? We gapped up a little bit from Friday, from the previous day, and actually sold off. But what happened? Gained momentum to the upside and just literally just exploded. Now, you could have taken this for a day trade here. And this is another importance of having some trade setups and a trading plan in your arsenal every day to understand that this is what I do for a living and how I need to manage my risk accordingly. Remember, trade management, risk management are key to the success of being a profitable trader. Okay. Now, lastly, is what I want to show you is a lot of these gap trading, and gap trading is another phenomenal tool in your arsenal to make money in the market. And what I say by that is, how to read gap trade, how to read the gaps during the day. Is it a novice gap, meaning a retail gap? Is it an institutional gap or a professional gap, as what we say? How to read them from the previous day. What to look for. Knowing when to fade a move higher or when to be looking for a pullback and adding the move higher. And as you can see here, JP Morgan gapped higher and literally just ran up, pulled back. Now you could have took that as a possible fade, but actually regained and literally flagged almost every 15 to 20 bars and actually started to now cap it. This was a huge trade going into the day. Take a look at one more, and I want to show you JP Morgan. Now, JP Morgan, how did you know if we were to fade this or not? Now, we don't know, but we want to put probability on our side. So reading a gap in the morning is critical, and especially very, very profitable during earnings season. Now, as we all know, gaps are created by either an earnings upgrade or a downgrade, a positive or negative mention on research firm, and or could be one of the pundits on CNBC talking about it, maybe a guest talking about it. Now, that's something that you as a trader will figure out in the coming days and weeks, when this is what you will be learning in our Trading Market Technicals mentoring room.